Well, for a little bit more on today's trading session, Anthony DePaul, Chief Executive at the Australian Stock Report, joining us live from our Sydney CBD studio. Anthony, wonderful to see you there. Thanks so much for joining us. So I wanted to get your thoughts on the session today, because this winning streak just continuing, obviously being driven by earnings in the US, expectations of central bank support. What are you making of the moves that we're seeing at the moment?
Yeah, we're getting very bullish price action overseas, and that's flowing through to our market. And at this point, because we've broken through that 5,400 point resistance level and we've almost got that confirmation of breakthrough, we're seeing a cash that's currently sitting on the sidelines going into our market in fear that if you don't do it now, you might miss out. And that risk-on sentiment and that very bullish sentiment is causing a lot of green, a sea of green in our market today. And some of those defensive sectors like gold, which had such a great run with all that uncertainty that we've seen over the last couple of months, that's now on the in the red with a lot of profit taking in that sector.
I want us to sort of ask you around sort of investor sentiment. Given the levels that we're trading at the moment, what are you telling your investors to do in this kind of environment? I mean, are they keen to be getting in and buying, or is there still a bit of hesitation and you're seeing some cash sitting on the sidelines?
Yeah, it depends which sector we're talking about. In terms of the banks, it's more of a holding or selling environment. The banks have, over the last few months, have been involved in a bit of a seesaw affair. 1 month they're 5% up, next month they're approximately 5% down, and they are really in a sideways trading range over the last few months. And now a lot of those banks are closing in on their recent the top of their recent range. So we do have to be mindful of that. What will support them, of course, is continued positive offshore leads and also expectations that the Reserve Bank of Australia might cut interest rates in August.
Yeah, that certainly seems like it is. The driver at the moment. Obviously, a lot of news around Japan as well coming through with more stimulus. So it's across the globe, this expectation of more stimulus being pumped in. If that is the case, and we do see that, I mean, we also have, of course, the ECB meeting. We have the Bank of Japan, our own RBA meeting. Is that really what's going to support this next leg higher in the equity market?
Yeah, that's correct. All eyes will be on Japan in terms of the size of their stimulus, where their stimulus will be directed, and also how long it will be, how long the stimulus will be rolled out over. And that will determine the impact that has on our markets, especially Japan being a major trade partner with us. And that may cause, potentially, if the stimulus stacks up, that might cause the materials sector to continue to be supported.
Okay, interesting. All right, we're obviously going to be waiting for news out of Japan. Let's delve into some of the detail out of those miners today. Woodside Petroleum in particular. Now, we're seeing that stock at the moment up about 0.6%, $20.50. We saw their production falling over 6%. Their revenues also fell about 16%, and obviously that was hurt by those lower LNG prices. What were some of the key takeouts for you?
Well, for the quarter, the production was slightly below expectations, but a lot of that was due to some maintenance work in the Northwest Shelf assets, and that maintenance work was completed ahead of plan. You would expect that to revert in the next quarter, and you would also expect revenues to revert with higher LNG prices for the next quarter.
Now, there's still lots of questions about how Woodside is going to sort of increase their revenues and production, because obviously back in March we saw them shelving those plans for the Pluto LNG project there. Back in 2014, obviously, they also abandoned those plans for the investment in the Leviathan natural gas discovery. So, look, we know that they do take a very disciplined approach, I suppose, to a lot of those growth prospects. Have some of those concerns, though, around their growth outlook started to ease?
Well, in terms of, if you're going to pick a company in the oil space and you want a company that's liquid and it's a large company that's going to reduce your downside risk in that space, what looks interesting is Woodside Petroleum, because they're all about positioning themselves financially, etc., to withstand a declining oil price in the next 12 to 24 months. We see that with their acquisition strategy. The management have come out and said they're looking for projects that are less than $1 billion in value, because they don't want to be they don't want their balance sheet to be overly geared. At the moment, it stands at about 20 to 30% gearing. And that acquisition strategy is seen through their West African purchase for $420 million US just recently to increase their 2P reserves, and that's very much in line with their strategy. Plus, they've actually provided already an impairment on their assets. So a lot of the negativity is out there, and those impairments are based on a forward oil pricing of about $35. So if it does set them up nicely relative to the other oil plays if the oil price does pull back over the next 12 months.
So they are sort of well positioned there in terms of their cash flow and their balance sheet. Is that strong enough to continue supporting those business growth opportunities?
Well, they are in a state at the moment of positive free cash flow, which will help pay off a lot of their debt that falls due over the next 2, 3 or 4 years. And if there are some assets that are within their acquisition criteria come up along the way, then the management have said that they will explore those options. But they're not going to rush into any decisions. And I think at the moment, with expected production coming in at 92 million barrels of oil equivalent, I think that's enough for them to operate well in this environment should oil prices continue to stabilise.
Well, what is your thought on the oil price? We know that those LNG prices have staged a small rally sort of more recently, I guess, and that's supported, in terms of what they've seen coming out, a bit of a recovery in the oil price there as well. What are your thoughts more broadly on the oil price and where it's going from here?
Yeah, this is a debated issue. The analyst community looking at an oil price over the next 12 months in the range of about $45 to $50 a barrel. But we see there, if oil was to go down to $30 a barrel, that creates a lot of fiscal pressures on a lot of countries around the world. So you would expect there to be a bit of a floor around that price. And at the same time, if oil does continue to rebound, as soon as you get to that $60 mark, a lot of concerns start to occur with US shale oil additional production coming online. So what we're looking for is prices to be within a range of about $45 to $55 a barrel over the next 12 to 24 months.
Okay, fantastic. Anthony DePaul, we're going to leave it there, but really appreciate you joining us. Thank you.
Thank you.
Anthony DePaul joining us there.